Today is Friday, August the 9th. Let's make this very quick because it was a crazy week. Started down, ended down, had 3 up days in the middle. All has to do with China trade, all has to do with tweets. And we finished the day on a down note, no doubt, because the president went on vacation and he's going to have way too much time on his hands and way too much time to tweet. The only good thing was low volume on the Dow, typical volume on the NASDAQ and the S&P 500. Decliners led advancers by a factor of 2 to 1, which is going to bring our market breadth back down a little bit, so it didn't quite make it to the neutral spot. So it just means that there's still no great enthusiasm to move money into the market. Let's just take a very quick look. We were down 19 today in the S&P 500. We pierced the cloud, finished below the 8 EMA. Now, do you remember we looked at a head and shoulders pattern quite a while ago? Here's another one that started on May the 11th with this left shoulder, this head, and this right shoulder. And that's what I did in the addendum video yesterday, and drew the line between the 2 neck points. And you can see that once we exceeded the right shoulder, we came down to test the neckline, see if there were buyers there, and we bounced up. We came down again, tested the neckline right here perfectly, which was also the 50 EMA. So either one of them could take credit for it. I would say it was the 50 EMA, but it failed. And now we're below that trend line. It's not something that we're going to continue to look at anymore. We're looking at these head and shoulders trend lines as places for support to find a bounce off of. And we've done it twice now since we've been making these videos, and that's just all in about a month. So what does it mean for next week? It's really hard to say. Just stay tuned for tweets over the weekend from the president. Apple did not close the gap yesterday, came back today and just did a doji where the buyers and the sellers were unconvinced, right in the middle. Very little change from the open to the close, but nonetheless down $1.56 from the previous day. Caterpillar still looking sad, rejected the trend line that we've been following, rejected on the trend line again for the 2nd day in a row, but we've been playing around this trend line all week. Gold down 39 cents. We're forming another little pattern, so I'm going to raise it up there. Gold will break out. That's my feeling, but I didn't buy any yet. Whirlpool, pretty sad, below the cloud. Definitely going to come down and test this 200 EMA. I decided not to let my stock go with the short 130 calls that I had sold for $3.50. I would have lost a lot of money, but I would have at least had some cash to protect me from further downside. I decided to roll those 130 calls in the next week for another 65 cents, and I believe the stock has a good chance of fading, particularly with any more tweets or bad news regarding tariffs. So we're seeking the 200 here, which is 135.74. WDC down $1. Those are the stocks we normally follow. Just not a very interesting week. We had Thursday, Wednesday, Tuesday, but we were bracketed by this huge down day and another one here. Remember that we did close that gap yesterday, and we came back here to test the top. We tested Friday's close, or we ended up with Friday's close. So last Friday and today, same price, meaning all week we did nothing. Hope you have a good weekend. I'm glad I could keep this to under 5 minutes. Just pay attention to what the goof in the White House has to say.